Chapter 1, Section 4. Understanding TRID, the Loan Estimate, and Consumer Protection. The following week, Tom and Emily decided moving forward with a short sale was their best option. Mark listed the property, completed the required disclosures, and after several showings, they finally received an offer. Excited, Mark walked into Lisa's office. "We have an accepted contract." Lisa smiled. "That's great news. But remember, this isn't the finish line. It's really just the beginning." Mark looked puzzled. "The buyer is financing the purchase," Lisa continued. "That means another important part of the transaction is about to begin. The lender will now start preparing the buyer's mortgage documents." She pulled a sample loan estimate from her desk. One of the first documents the buyer will receive is called the loan estimate. "I've seen one before," Mark said, "but I always assumed that was between the lender and the buyer." "In many ways it is," Lisa replied. "But as a real estate professional, you should understand what it is and why it matters, because it can affect your transaction, your closing date, and your client's expectations." Lisa explained that TRID stands for the Tyler-RESPA Integrated Disclosure Rule. The rule combines disclosure requirements under the Truth in Lending Act, TILA, and the Real Estate Settlement Procedures Act, RESPA, into standardized forms designed to help consumers better understand the cost of obtaining a mortgage loan. "You'll often hear TRID called the Know Before You Owe rule," Lisa said. "The entire purpose is to give buyers clear information before they become legally obligated to the loan." Mark looked over the loan estimate. "So this tells the buyer what their loan is expected to cost?" "The loan estimate provides the buyer with an estimate of the loan amount, projected monthly payments, interest rate, estimated closing costs, and the amount of cash they'll likely need to close. It allows buyers to compare loan offers from different lenders and better understand the financial commitment they're making." Lisa explained that federal law generally requires the lender to provide the loan estimate within 3 business days after receiving a completed loan application. "The important thing for us as real estate professionals," she explained, "is understanding that buyers need time to review these disclosures. Good communication and realistic expectations help keep everyone on the same page." Mark continued reviewing the document. "So these numbers are final?" Lisa smiled. "Not necessarily. The loan estimate is prepared using the best information reasonably available at the time. As inspections are completed, title work is reviewed, and lender underwriting continues, some costs may legitimately change if permitted under federal regulations." She reminded Mark that lenders must prepare the loan estimate in good faith and cannot intentionally underestimate costs simply to make one loan appear more attractive than another. The goal is transparency, not surprises. Mark nodded. "I've heard buyers mention something called the closing disclosure, too." "That's the second major TRID document," Lisa explained. She placed another form beside the loan estimate. "The closing disclosure looks similar, but it serves a different purpose. The loan estimate tells buyers what they should expect. The closing disclosure tells buyers what they are actually paying." Lisa explained that the closing disclosure contains the final loan terms, interest rate, monthly payment, and itemized closing costs. Federal law generally requires buyers to receive the closing disclosure at least 3 business days before consummation of the loan, giving them time to carefully review the final numbers before signing their loan documents. "So, if the closing disclosure goes out late," Mark asked, "does that affect our closing date?" "It certainly can." Lisa explained that one of the most common causes of delayed closings is assuming everyone will be ready on the same day. If the lender is still waiting for information, underwriting isn't complete, or corrected disclosures are required, the closing may have to be rescheduled. She looked directly at Mark. "That's why experienced agents avoid promising an exact closing date until the lender, title company, and all parties confirm everything is on track." Mark smiled. "So TRID isn't just paperwork. It actually helps protect buyers." "Exactly," Lisa continued. "TRID was created to improve transparency. It gives consumers an opportunity to understand their financing before closing and reduces the likelihood of unexpected fees or last-minute surprises." She reminded Mark that although real estate professionals are not responsible for preparing the loan estimate or closing disclosure, understanding the purpose of these documents allows agents to better educate clients, coordinate with lenders and escrow officers, and anticipate potential delays. "In a short sale," she added, "communication becomes even more important. The lender approving the short sale, the buyer's lender, the escrow company, and both real estate brokers all have to work together. A delay by one party can affect everyone. Mark looked at the calendar. So even after we receive lender approval for the short sale, we're still coordinating the buyer's financing. Lisa nodded. Exactly. Every successful short sale depends on communication. The better you understand each step of the process, the better you'll be able to guide your clients from contract to closing. She smiled as she gathered the files. Now that we've covered the buyer's financing disclosures, let's shift our focus back to the seller and discuss how homeowners qualify for a short sale and the common misconceptions surrounding the approval process. Key takeaways. TRID stands for the TILA-RESPA Integrated Disclosure Rule and is designed to improve consumer understanding of mortgage financing. The loan estimate provides buyers with an estimate of their loan terms and closing costs early in the financing process. The closing disclosure contains the buyer's final loan terms and closing costs before signing. TRID helps protect consumers by promoting transparency and reducing unexpected changes at closing. Understanding TRID allows Arizona real estate professionals to better coordinate transactions and manage client expectations during a short sale. Online discussion. Question 1. Why is it important for a real estate professional to understand TRID even though lenders prepare the loan estimate and closing disclosure? Answer. Understanding TRID allows agents to explain the financing timeline, coordinate with lenders and escrow officers, manage client expectations, and recognize situations that may delay closing. Question 2. What is the primary purpose of the loan estimate? Answer. The loan estimate provides buyers with an early estimate of their loan terms, projected payments, and closing costs so they can make informed decisions and compare financing options. Question 3. How can TRID affect the closing of a short sale transaction? Answer. Because buyers must receive required disclosures within federal timeframes, delays in underwriting, revised disclosures, or lender approvals can postpone closing. Good communication among all parties helps reduce these delays.